So like late last year, people probably went, oh my gosh, the rental rates hit a peak where we just can't afford to move. Like I've got tenants in places that are paying $2,100 that I don't think will ever move. You'll have to drag them out because that unit's up from 21 to 3,000.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
Mr. Kyle Grant, thank you so much for coming in today. Appreciate you and joining us in the new humble office abode.
Yeah, it looks great in here, man. This is totally set up, ready to go for you.
I'm fired up. Fired up.
Absolutely.
Long time coming. We've been trying to make this work for, I don't know, like a month and a half, 2 months, maybe more. 3 months.
I think we've been talking about it probably once a week for 8 weeks.
8 weeks? Okay, that's
probably
2 months.
Probably since the recent tenancy announcements from the feds and province and stuff. So
yeah,
we're like, we should probably talk about that at some point.
And this is topical because everything is changing right now.
Yeah,
literally everything in the real estate market, from interest rates to values to, I don't know, tenancy laws. Does it make sense to invest in real estate, basically?
Yeah.
And you, my friend, as we were just chatting about in the other room, are essentially a bailiff. You're kicking people out. No, I'm just kidding. You're
pretend to be a lawyer sometimes, not a lawyer.
All good, off the record. Nobody is going to take that
Definitely
legitimately.
Not, no.
But yeah, I mean, like, it's funny when first question, for everybody, they know you're a property manager. We got that sorted out. We did that in the intro. Yeah. But the first question off the bat, you walk in the room and people hear that you're a property manager. What is the most common question that you get asked?
Ooh, what's the worst thing that's ever happened to you? Or what's your recent horror story? Or hey, how much do you think I could rent my condo out for?
Okay.
Yeah.
So they go from one polar opposite, which is always like, what's the worst thing that's happened to you?
Yeah.
To like, how much do I rent my place for? Okay.
Well, because people always talk about rentals in two ways. Well, there's risk and there's fear, or there's, hey, what kind of money can I make? Can I cash flow? How does this work?
I'd be curious to know, based on the amount of people that ask you these questions, what if you could like maybe just throw a rough percentage? Like, what's the percentage of people that are asking you for the horror stories versus how much can I rent my place for?
Oh, that's a tough one because I don't usually count. But sure. I want to say it depends how well they know me.
Just off the top of your head.
Probably if I tell someone I'm a property manager and they have property, it's almost 100% of the time. Oh, how's the rental market?
Okay.
I have this. What do you think current market is? And then usually when they find out after they've had a tenant for a few years, they get kind of mad about it and salty. They're like, well, how do I get a tenant up? But anybody who actually knows me and is like kicking around in my office or something, they're like, well, what are you working on today? So that would be probably 60% of the people would be like, well, what's going on? Like tell me a funny story. And then 40% are people that are actually there to be like, hey, well, can we do this? Otherwise, some people like just to say, oh, like, how's the weather?
Right.
They just have like normal, healthy conversations.
Sure. Yeah. So most people like on the streets that aren't involved in the real estate industry, when they find out you're a property manager, they think that you're kind of like a slumlord or like this badass guy that kicks people out, or
I think a lot of people like it really, they don't know what we do. Right. It's oftentimes like they have like a conception, that we do one thing and just one thing only. But really, once you get into explaining it, well, and the value that we can provide in that role, where we can create better value for the landlord and the tenant and risk mitigation, they don't actually understand all the steps that go into property management.
Sure.
And what value we can provide and if it makes sense. I probably tell half the people that call me to work with me that you don't really need a property manager if you're, let's say, a basement suite in your house, but you can get us to vet tenants for you, which is extremely valuable. There's a fee involved, obviously, but then likewise, if you're a homeowner, you live in North Vancouver and you just bought a Langley condo out here in the new Vesta development that we're sitting in right now, well, there's value because you can't effectively keep an eye on your rental property if you're that far away.
Right.
So there's value there. And sometimes insurance companies will even require us to be involved. Like if you have a rental property in Kamloops, we're seeing right now that insurance companies, they see the value in having a localized property manager because usually you can spot problem tenants by actively being involved in management of the property.
Totally. I think the reason I bring that up is because, obviously I talk to end users, people who are homeowners, investors, people who are renting now that are going to buy. And I bring up property managers. I bring up the conversation And I just think that there's a lot of a miscommunication around what you do, but B, a lack of understanding as to how to find someone effectively. And then in addition to that, like what is it that the value, like you said, that this person actually brings to me, tangibly speaking? Honestly, I face the same things as a mortgage broker. Like half the time, nobody knows what I do other than potentially hitting a calculator or something of that nature, right?
Yeah.
So like getting into it, like right now, the reason this is topical for me is because more people in the last few years have opened their eyes to the idea or the concept of real estate investing.
Yeah.
Now, a few years ago, like when rates were really low, you saw everybody and their dog basically saying, I want to buy a second property. Now, rates have gone up. 2023, nobody wanted to even talk about real estate investing, or they've been trying to offload properties specifically since the capital gains exemptions or taxes have come into play, right?
Yeah.
And it seems like there's this kind of a dynamic that's shifting back and forth.
Yeah.
If you look on TikTok, you're probably the worst person on earth. I mean, aside from people who own the investment properties, right? The property manager and the investor are the worst people in Canada right now.
Well, yeah, according to certain Facebook groups and stuff, absolutely. Anybody who owns a secondary property is a slumlord or scumbag for controlling current rental prices, which is really not what we do. The market does and what people are willing to pay.
Yes. No, but we're bad people. We're awful.
We're jerks. Yeah. And you know, when the housing bubble collapses and we're all out of work, well, then the tenants can rise up and
overtake the world.
Yeah. And you know, when condos go into negative value and stuff and everyone's a homeowner in a very democratic fashion.
Okay, so the reason I want to start, and not to bring us down on that that's a slippery slope. That can be
we got to be careful what we say there.
Yeah. So the reason I bring that up is because, man, if you look at TikTok, I mean, as a mortgage broker, or if someone's a real estate agent or a property manager, we're the worst people on earth, and we control everything and so forth. But the reality of the situation is nothing anywhere near close to that.
No.
And you know, obviously, full disclosure, I know you manage one of my properties right now. And the truth of the matter is, it's just like anything in life. You hire someone to do something that they're best at and what they're focused on, as opposed to trying to be okay at everything else. So I'm a huge advocate of what you do and the value that you bring in the marketplace, purely from a context of knowing that it's best for both the tenant and for me.
Yes.
Because in many circumstances, I believe that I just wouldn't even have the time, the energy, or the know-how to do half the shit that you deal with on a regular basis. Excuse my language, guys. This is an R-rated show, though, so if you're watching, you don't like it, sorry. Not sorry. So okay, so we talked a little bit about that. I mean, I'm going to come back to what you're doing right now, but the reason that we wanted to have this conversation today, in addition, is because the world is changing really quickly.
Yeah.
People are trying to figure out, okay, should I still invest in real estate and why? Which I'm not going to make you answer that question.
Yeah.
But I am going to talk to you a little bit about what it's like to be a property manager in a world where it is constantly changing. And if someone is still interested in getting investing or getting out, what does it make sense for them, and where does it make sense? So why don't we start off really small here? Why don't we talk a little bit about rent prices and what's going on in that marketplace? So you cover mostly of Fraser Valley, which is just outside of Vancouver.
Yeah.
For the most part, right?
Yeah, we go as far up as New West. We have partners that go farther, because I always say you have to be centrally located and be able to actually get to the properties that you look after. So we won't take on properties that we know that we can't do a good job of.
Right.
Simply put. But so we go as far as New West, out to Abbotsford, north to Maple Ridge, south to the border, basically.
Right.
Obviously, I don't cross borders, so that would be weird. But yeah, we're Fraser Valley based, and that's home for us. We're centrally located smack dab in the middle of it, and I can be at any one of my rental properties ideally within a half hour is the goal. So if you get that phone call at 2:00 in the morning that, hey, toilet blew up, first call is restoration / they bring a plumber, and then I'm there.
Okay.
And I don't want to be driving an hour and a half to go check out a property in an emergency situation.
Definitely.
Yeah.
Makes sense. So rental prices is something that has been a big topic, nationally speaking, all across the country for the better part of the last few years. Now I'm going back probably till 2021.
Yeah.
A big part of that, property values haven't gone up. And then the second part of that, from my perspective, is population growth, immigration. There's not enough building, all that kind of stuff going on. But I'd love to know from the ground floor, just kind of a recap on the last couple of years from your context on rental rates, how fast they've gone up, where is the demand? Why don't we start with just generally speaking, how fast you've seen rental rates change and what's gone on there?
Yeah, and I can actually use really good examples. In 2021, we were placing the average 2-bedroom brand new condo was priced about $2,000 a month. Today, that same condo is about $28,850.
In which cities?
Quite literally, Langley, just up here.
Okay, so for anybody listening, suburbs about a 45-minute drive from Vancouver.
Yeah. So we've seen probably 20% year-over-year growth, and you're right. A lot of that has to do with people coming here and there not being adequate housing supply for them.
Okay.
But even as much as housing as we've seen come on board here, I mean, I'm looking at a high rise behind you that's going to have a few hundred homes in it.
Yeah.
There, if I post a 2-bedroom condo today and I price it at 2,600, we're gonna have probably 30 or 40 people come look at it, and we will essentially get a few applications and we just pick the best one. Now, sometimes we get 3, 4 applications and then we just kibosh them all because you want to prioritize having a safe and reliable tenant over dollars sometimes, and that's kind of where there's a misconception. But likewise, we'll continue to see that, especially as the cost of homeownership goes up,
Yeah.
because people won't buy investment properties that don't make sense typically. If they can't have the put down a certain percentage and cover at least the interest, property tax, insurance, and ideally a property management fee, then it just doesn't make sense in most cases.
Right.
Because your cap rate is, or your internal rate of return is going to be based on this over a time period. It really depends on the owner. And likewise, we are seeing more corporate landlords that have 4, 5, 6 properties that are acquiring more. But we're also seeing, independent owners liquidate their investment pools because of the increased risk and changes that we've seen, and get out of that just because they don't have the risk tolerance or the capital to maintain that unit if there's a 3 to 4 month lag period where you end up in a situation of eviction.
Okay.
I had the conversation with a lady yesterday where I just said, you probably need to sell your unit. You can't afford this.
So you're telling her like, yeah, it doesn't make any sense financially.
Yeah.
Okay. So let's go back to the rental rates
Yeah.
for a second here. 2021 to 2024, we saw a 20% increase in values, if not more than that, based on what I'm hearing from you.
Yeah.
2000 to 2800. We're right now smack dab in the middle of 2024. Are we still seeing rental rates increase? Have we seen things slow down?
We're seeing them go up again at the moment, at the time of this filming. But last year, when things slowed down in both the resale market, we did see a slight drop in rental prices between July and December. And we're talking with my other colleagues as well. They saw it basically province-wide, where things probably went down about 20% in a 3-month period. So if you saw a unit go, like at one point, a basement suite that was $1,200 in 2021, it would have been like $2,000 in right at peak of July of 2023. Those are hovering about 1850 now, 18 to 1850.
So what do you think was the reason that we saw that drop in that period of time?
People got kind of a fever and they needed to move, and people were kind of entering a hard spot because that's when there was interest rates were going up. We were seeing massive inflation, food prices, and then there was uncertainty about government policy on it or what kind of action would be there. I think the whole area kind of got scared, but there was then also just this giant of influx of people that moved here, and then it calmed down. Because prices did eventually hit a point where things had to cool. It's like any market, right? I mean, look at the price of gas. We went $1.50, $2, and now we're back down at $1.80.
Right,
so
right.
There's ebbs and flows, which is why you don't focus on specific time periods, but you focus on it over time.
Right.
Yeah.
So, okay. So last year, the first half of the year, you saw a whole bunch of people come here, rental rates went up, and then the market got a little bit flooded. Uncertainty meant some people were not moving, but there were still people looking for rental properties. So that's interesting. So you just saw less. So 2024 year to date, what's the biggest thing that you've noticed? Just more people coming to the country again, more people moving? Like, what are the trends that you're seeing most predominantly?
I think we're seeing a lot of people just naturally move because over time, people's lives change. So like late last year, people probably went, oh my gosh, the rental rates hit a peak where we just can't afford to move. Like I've got tenants in places that are paying $2,100 that I don't think will ever move.
Okay.
Like you'll have to drag them out because that unit's up from 21 to 3,000.
Yep.
So unless,
they sold the house or something,
unless they go and buy a house, or they break up quite literally and hate each other, and even then one person will try to remain.
Yeah.
It's there's a natural tendency of people that they still need to move over a certain period. So by about now, you're starting to see the people that were just pre-fever or in the fever, they're just naturally having to make moves. So it kind of comes in waves.
Sure. Yeah. Okay. Interesting. So with that all in mind, someone is looking at the market right now, and your specialty is obviously the Lower Mainland right now. I'd like to understand for you specifically where you find the greatest amount of value. That means rental value, so amount of rent received relative to the property type or the cost of property. And I know that you can only speak regionally. I know you speak to people in different areas, but in 2024, where are people seeing the greatest return, and where are you seeing the highest level of demand for properties right now?
The highest level of demand is right now, it's always kind of in the bottom sector of the market. So basement suites, 1-bed condos, the cheaper entry level stuff.
Okay.
Now, rental rates aren't everything.
Sure.
Right? You want to focus on your internal rate of return and then calculate out. So because in BC, cash flow is not the name of the game.
Right.
It's overall capital appreciation. So there's more to it than that.
Okay.
Where we're seeing the lowest demand are high-end houses. But that's normal. They take longer to sell. They take longer to place, and there's a lot more risk. And their price, like high-end prices, if a $1.8 million house fluctuates 20%, well, that's a lot different than a $600,000 condo.
Definitely.
So we're finding most of our investors are actually picking up at the lower end of the market. And we are seeing massive growth in commercial as well.
Okay.
Yeah.
Interesting. So commercial, what you're referring to is, are you talking about retail? Are we talking about warehouses?
Retail spaces, warehouses. We are seeing good growth in that area just because there's uncertainty in not only population growth of Canada and rising rent rates and demand, but one, there's less commercial and there's always going to be a shortage in the lower mainland. We're never going to have a surplus of it unless kind of like the office spaces in COVID. It was basically the only thing that saw like massive vacancies. But likewise, legislative changes are less likely to affect the commercial markets. So there's less risk. There's just a much higher barrier to entry.
Got it.
So some of our larger clients are actually liquidating their residential portfolio and moving into commercial. But we are seeing as well the same clients going out and picking up pre-sales because they can secure the prices knowing rents will be up by the time it completes. So the return on it is much safer, unless you're somebody who buys it like when there's a fever in the market. And pre-sales are going like nuts, like hotcakes. But if you can get something like 5 years out, well, you're almost guaranteed that the rents will continue to rise. So if you can get a pre-sale that completes like between 2 and 5 years, your rate of return is a lot more secure.
Talk to me a little bit about the temperature of the market right now. Meaning, like we just talked about, we're going to touch on this in a minute here, some changes to the bylaws around what you can rent, what you can't rent, how you can raise rents, how you can, end tenancy and so forth. But I'm just genuinely curious because, with what we talked about before, Trudeau's, JT's new rules and regulations and taxes on capital gains, with rates having been higher, with the cost of housing being higher, and I think just generally speaking, people having less money to spend right now, it seems like the temperature of owning a real estate as an investment has cooled off, as you know. Although it's come back a little bit lately, it's definitely cooled off. I'd be curious from your perspective, like, what are you seeing people generally do right now, and how are they feeling about renting out their properties or re-renting them? Like, what's going on?
Well, a lot of what we're seeing right now is people they don't know what the regulatory changes are, and once they find out, they kind of go, oh boy, is this even worth it? Because it hasn't been explained. It just hasn't been explained properly. Even if you try to find details about what JT's proposed actual changes will look like when he finally implements it with the provinces, because the provinces have to be involved. The only real mention in the budget is, yep, all right, cool, capital gains are going up, and we're going to do a renter's bill of rights. And apparently there's mention of a homeowner's bill of rights, but they won't tell us what that looks like.
Got it.
Right? So anytime you create uncertainty, you increase risk. It's just bad for markets in general.
Right.
People just don't know. And even the provincial changes right now, there hasn't been enough shouting from the rooftops about what's coming. And it's as a filming, it's quite literally, there's going to be regulatory changes in the next 4 weeks.
Okay. You touched on the Renters' Bill of Rights, the new, I guess, rules and regulations that JT's brought out that renters have to follow. Specifically, one item I want to touch on here is the credit reporting. And what what's the temperature from your perspective? Like, are tenants excited about this? Is anybody talking about it at all? Or
So there's already programs in place where we could report tenants' rent payments on their credit bureau.
Okay.
But you can't force a tenant to do it.
Right.
Now, I would actually and they've said on-time rent payments can be put in, but they haven't said that not on-time ones will be. So it's really hard to say, as a manager or a landlord, will I be forced to go in and mark if the tenant's good? Will it be mandatory for the tenants to be reported on for bad payments? I frankly would love if I could apply and show missed rent payments or late payments on a tenant's credit bureau.
Sure.
That would naturally decrease risk for owners because you would have a whole lot more information when you look at a credit bureau.
Yeah.
Right now, we're finding credit bureaus are still our single biggest tenant screening tool because they don't lie typically.
Yeah.
And if a tenant's constantly not paying their phone bill, or they're constantly late on their cards, or they've got a high debt load, maxed out credit cards, or they've, God forbid, had a judgment against them.
Yeah.
Well, those tenants are likely to be constantly late on rent as well. But if you go in and the tenants paid their phone bill on time all the way through, they haven't had collections, you got an 820 credit score. Well, now credit score, as you probably know, isn't a true reflection of financial health, but it does help. If they're good there, they're probably good on their rent, because rent's almost the last thing to go. Now, if a tenant, I've seen tenants that are constantly in default on their rent because they want to prioritize the stuff that shows up on their credit bureau as well.
Mm.
You know, if your rent's 2,800 and your paycheck on the first is 3,500, and you only have and you've got a $200 phone bill, $500 car payment, all that, they're actually going to probably prioritize the things that are likely to get taken away from them.
So what I'm hearing from you is that this could potentially, with more
Mhm.
reporting or requirement, it could actually potentially benefit the landlord more so
Yeah.
than the tenant.
Yeah, as a property manager, I would love mandatory credit reporting if it
Mm.
was mandatory.
Right. Okay.
And a requirement. If you can only report on time rent payments, well, then there's no net benefit to anybody involved, except for the
Yeah.
fact that they're just trying to help tenants establish credit. Then,
Interesting.
so it
Well,
needs
that
to,
that
yeah.
that right there nails home the fact, because it is being sold right now as a benefit to the renter.
Mhm.
And what I'm hearing from you is, although it could be an annoyance to a property manager or a little bit extra work for a homeowner, it actually will benefit them because they'll be able to realize the real outcome of someone
Mhm.
renting somewhere else.
Yeah.
And to your point, yeah, I mean, the likelihood of me seeing someone who has zero credit but has rented a property, and that being any type of consideration on their credit bureau, meaning they can qualify for more because this has been reported, is very minimal, because we have the ability, especially for if you're new to Canada or someone who's relatively young,
Yeah.
you can show your 6 months of rent payments, or and have a note from your landlord and show your bank statements to see this come out, and we can use that in lieu of a limited amount of credit, especially if someone's younger trying to get to the marketplace right now, right? So yeah, it's interesting. I don't think this will make a massive difference. What else is in there? Is there anything else useful or interesting in that Bill of Rights that would be notable?
Towards BC, I think we were talking about that earlier.
Yeah.
They're talking about standardized documents,
Okay.
and they're talking about just standardizing the way it goes across Canada.
Okay.
BC is already has an established standardized document system. We already
Okay.
have a functioning RTB. We already have regulations and tenant protections. There are provinces and territories that don't have rent controls.
Okay.
Like in Ontario, and any property newer than 2018, they're not rent controlled at all. So the landlord every year can bump you up to market rent.
Hmm.
They kind of want to kibosh that.
Hmm.
They want standardized rent protections. They want to. There's speculation that they might try to limit the ability to increase rents between units, but something interesting that's in there is maybe disclosing what the past rent rate is to a prospective tenant.
Hmm.
I don't think that's going to do anything.
That's like disclosing the sale price of a home.
Oh,
Like it doesn't. I mean, from my perspective, doesn't really make a difference, because
yeah,
the sale price is based on when someone purchased it or didn't
yeah.
purchase it.
Like,
If someone rented it, a year and a half ago at a certain rental rate, that's irrelevant for today. I imagine.
yeah, like if I go to sell my grandfather's house that he bought for 50 grand 40 years ago, like that's going to have no impact on the fact that that house is 1.6, 1.8 today.
I think that's more interesting, just generally speaking, from a
Mm.
study perspective. And as a landlord or investor, I'd be curious to know what rental rates were, because that could help me understand if that area is even more marketable, or what's happened historically speaking in that area.
Well,
But aside from that, I don't see a lot of other value.
I mean, if the data would be public,
Mm.
it would actually create a lot of value, because right now, if you want to price a rental, you kind of look around on the market, but unless you've got an expansive rent roll,
Yep.
you're not going to know what present value is on
Yep.
a 2-bed condo in Langley.
Right.
You can look at what's advertised, but just because something's advertised doesn't mean that's what it's renting at.
Yeah, that's a good point.
And I kind of see that all the time, where an owner will go in and we'll be like, "Yep, it's a 2-bed condo in Langley. Last one we placed was 2 weeks ago for 2850." And I'll say, "Well, I saw one advertised for 34."
Hmm.
And I'm like, "Well, I drive a 3-year-old truck. 2 years ago it was marketed for 80. Doesn't mean I'm going to get it if I try to sell it for that."
Mm.
So I think if that data was actually available publicly in some sort of report, like it would actually create a lot of value for private owners, and it would actually kind of take some value away from our expertise in my field, because right now we're not only a service provider, but we have access to all this data. So
Mm.
in regards to the rest of what they've proposed, it's not. I don't think it's going to make a substantial change for VC.
Okay.
Almost all of it doesn't really apply here,
Understood.
because we already have most of it.
Yeah. Okay, so what are your thoughts on what we were talking about before? So British Columbia specifically
Yeah.
has made some changes. You briefly explained them to me very in detail.
Mhm.
Let's just go through kind of a focused explanation of what some of the proposals are
Yeah.
and when they're likely to take effect right now. So what was it, and where are we at right now as far as the biggest changes?
Well, yeah. So the bills already achieved royal assent, which means some of the changes are actually backdated to when it received first reading,
Okay.
April 3rd. So April 3rd, they changed the timelines that a landlord must occupy if they give a 6-month notice, or sorry, a 2-month notice for landlord occupancy. The Landlord at that time used to have to occupy for just 6 months.
Okay.
Bing, bang, boom, overnight, they managed to change it. Now a landlord has to occupy for 12 months.
Okay, so if you were somebody who owns a property and you
Mhm.
have somebody renting it out right now, and you were to give them notice to say, "Hey, I'm moving back into my house," you have to then make sure that you can commit to staying in the house for 12 months.
Yeah, and non-negotiable. If you even kick them out and you just leave the house empty, there's compensation payable.
Sure.
Uh,
How much
s-
is that compensation?
right now it's 12 months. That is expected to increase when probably in 6 months to a year.
12 months of their current rent or market rent?
It would be 12 months of their rent.
Their
So
rent.
there's still a risk calculation there, and I have seen it. We don't take part in it because we don't do illegal evictions, but I've seen it where people will purchase a property that's had a tenant in it since 2012, and they've done the calculation that the 12 months rent, their break even point is actually going to be in 6 months.
Sure.
So they know there's value in still doing that, which is why we're seeing these changes.
I'm going to take this off track briefly, but
Yeah,
since we're already there right now, and I don't know where this fits in the tenancy laws, but you have the ability to voluntarily end a tenancy, or
yeah,
at least both parties. I assume there could be some level of negotiation on both parties to meet that.
yeah.
How frequent is it that a landlord will come in and say, "Listen, I'll give you 6 months of rent at today's rent to exit if you sign this agreement"? Is that pretty common?
We're seeing that actually a lot right now,
Okay.
especially with the uncertainty in the new rules. People that are going to go to sell their house, it can be beneficial for them to go to the tenant and wouldn't necessarily say 6 months rent. I just say, what's it going to take to get you out? That's essentially a cash for keys deal.
Sure. Yeah.
Hyper common in the States. So we're actually seeing more of that up here where they're reaching negotiated settlements before even listing houses for sale.
Right.
And we're also seeing it where contracts will come in and they're subject to the seller entering into a
An
mutual
agreement.
agreement. Yeah.
Yeah.
So that's becoming the more common way to get them out because with the uncertainty of the rules, it's ultimately easier and there's less risk.
Right.
Yeah.
And then the tenant and the landlord sign an end of tenancy agreement
Yeah.
mutually. And do they put this number or value on the contract, or is this a side deal typically? Or
It's a side deal. What I typically do, because we've done a few of them, the mutual agreement, as long as it's mutual, is binding. There's no dispute process. The only thing the tenant could say is landlord basically put a gun to my head and made me sign it or forge my signature, but those would be illegal and a crime, and the tenant
sure.
could go to jail for making those allegations.
Yeah.
Typically, what we do is we would sign a letter. We would have a letter, both parties would sign it that says, in as consideration for agreeing to this, I so and so without duress hereby agrees to accept such and such for signing this mutual agreement. This is binding.
Yep.
Game over. And then you issue them a receipt when you actually pay them.
Okay.
So now you've got consideration in exchange for actually agreeing.
So you're seeing people do this more and more right now,
Yeah.
predominantly because they're looking to sell or move in or put in new, like, what's the primary reason?
It's almost exclusively for the purpose of sale where the buyer wants to occupy.
Got it.
And that has a lot to do with the regulatory changes being uncertain.
Right.
Yeah.
So a lot of people are selling off their properties. They don't know what's going on with the capital gains tax. They don't know what's happening in the marketplace as far as renters are concerned. They
Mhm.
don't like the idea that the rules are coming in. And so you're seeing more and more end users, like buyers who are going to live in the house buying these rental properties, which in turn is probably squeezing the rental market more, no?
Yeah. Eliminating housing stock or taking rentals out of the market will always increase rents.
Okay, so let's just make sure this is, I'm hearing you accurately, because this is
Yeah.
pretty key. So basically, the new rules and regulations that have been put in effect by the provincial government and the Liberal government are reducing the rental stock specifically from well, not owner occupied, but landlords who are basically mom and pop shops
Mhm.
or people who own a few properties on their own. Now, obviously, they have nothing to do with the large buildings or anything of that
Yeah.
nature, the apartment onlys. But what is that doing to, I guess, the general rental population? It must be squeezing them and
Yeah.
increasing rents and causing a lot of stress.
Yeah, so I don't have a crystal ball. I can't tell
Sure.
you what the market's going to do next year as a result of changes because there's always the law of unintended consequences.
Yeah, sure.
But in theory, anytime you increase risk, you're going to lower demand. You want to push cap rates up. Well, now what I think you're going to see is I think you're going to even see condo prices almost plateau, and then rent rates will increase relative to that increased risk.
Right.
And as you're removing, people aren't buying pre-sales for the purpose of creating rental stock.
Yep.
First-time home buyers might actually get a better deal.
Right.
It might plateau condo prices for a bit, but it's going to push rent prices up because now you're lowering the rental stock by taking the people that want to buy 5 pre-sales in the the towers.
So the adverse effect is the fact that they're basically going to increase rental rates, reduce the potential rental stock. They're going to provide opportunities for people to be owner occupied, which is part of the whole affordable housing play, I suppose, at this point right now. However, to your point, I mean, how many builders are going to be willing to put down and put shovels in the ground right now if they don't have as many deposits, right?
Well, and that's just it. Speculative investors are good. They're required to get things built. The government says we want to build so many millions of homes in the next 5 years. Well, getting shovels in the ground is important, and unless they're going to finance these projects to get off the ground, it's just not going to happen.
Sure.
Right? It's unless the government steps into the home building game. Which I think the government should say is a government. Unless they step in or intervene, there's always unintended consequences.
Sure.
And just anytime you change things, and you do it with uncertainty, such as what we're seeing in the regulatory changes. There's nothing certain about what the Renters' Bill of Rights is. And with how the new BC changes are written, there's nothing really certain about what they can do in 6 months.
Yeah, I agree with you. And I think confusion, generally speaking, creates uncertainty. And uncertainty is going to stop people from doing almost anything or making any rational decisions. It creates emotional decisions or decisions out of fear as opposed to knowledge and information, which is what we're doing here today to bring some knowledge to the people and so forth. Okay, so this is really good stuff. And there's a lot here to cover. And we've covered a ton of ground here already. Kyle, I guess just kind of looking forward the second half of 2024, moving into 2025, any trends that you see in the rental markets, anything that you'd suggest people look out for if they want to be invested right now still, and or maybe run away from right now?
I would never buy a rental property with a short time period horizon.
Okay.
I would focus on a 5-year timeline, 3 to 5 years at least. Buy and hold, and just make sure that you have an appetite for risk.
Sure.
Especially when you're coming into residential, there's going to be risk. Now that risk could change the calculation of what it's going to take for you to get in, if you can make that work. But in terms of just watching, you're going to want to keep up on regulatory changes. Some of the changes coming are due to confusion on even how to fill out paperwork from a landlord perspective.
Right.
So you want to stay up on that. You want to watch for the next election is going to be crucial because it is going to be a test of the public whether or not there's good done by the legislation. And if we see the same parties come in, that will be rewarded, probably with more changes.
Right.
Because that's going to tell them that, hey, this is really well perceived by the public.
Okay.
I've had some very kind words with my local MLA's office about the changes. And if you're somebody who wants to maybe help avoid that, maybe try to stay in contact with them, page them for updates, keep an eye on what any sort of hinting at government press conferences, because this recent bill that just came through the BC legislature came out of nowhere. Bing, bang, boom. There was a press conference, and then couple of the changes took place that day, which is risk. So just stay informed, call an expert, and just make sure you're within your risk tolerance.
Right.
And if you're a tenant, just keep yourself informed on your rights and don't make up rules. I'm seeing that as well.
I like that. Make up rules. Awesome. There's a lot. Honestly, there's so much to pull from that, man. Thank you so much for coming down. And if you guys want to reach out to Kyle, we'll put his information in the YouTube and the podcast comments. You can find him on Instagram, Facebook, text you, call you, all of the above. Just don't do it after midnight? You're good up till then?
Unless it's fire or flood, I won't answer.
Yeah, perfect. D&D mode all times. Kyle, appreciate you coming down, man.
Absolutely.
Thank you so much for your time.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.